All right. Hello, everyone. Thank you for joining us for the extremely literally named RWA and Stablecoin Fireside Chat with industry leaders. Want to be very clear why we're here. We're going to have a lot of fun. We're in the process of getting everybody on stage. I think our friend Chase is the last, so I sent you an invite request. So let's get started. I'm excited. We did a space a couple of weeks ago on this topic. It's one that admittedly I didn't know much about a month ago. And the more I've learned, the more important I think it is. I even sent out a tweet a couple of days ago saying that I believe that within 2 years, most on chain transactions will involve stable coins and RWAs. It was a very polarizing discussion, which is what you want to do on X to earn that sweet, sweet engagement. So we can talk about that. But before we get into it, quick overview. We're going to talk about real world assets and stable coins, where we're at in 2025, where we've come from, emerging trends. We've got a really great panel. And we're doing this today because I've been working closely with the Stable team. I think what they're building is really important. And I think it's going to be a really important platform in the coming months and years. And so we're gonna talk about a lot of different topics, and then also hear from the Stable team as well. Our friend Fran is manning the Stable account, and he can introduce himself soon. So before we get into the conversation, yeah, why don't we go ahead and talk through quick introductions? If everyone can keep it to 30 to 60 seconds, that would be great. So Sami, Rusani, if you want to jump into it first, please go for it.
Absolutely. Thank you so much for having me. Appreciate it. Sam RUSANI, been in crypto since 2012, so I've been around for a bit. Company is Type 3 Capital. We're a corporate finance company, and we run a hedge fund, and we specialize in tokenization of large assets, such as natural resources, oil and energy. It's mostly what we've done and in emerging economies.
Amazing. Appreciate it. Over to you, Chase. Why don't you go next?
Hey everyone, I'm Chase, a lead product at Brale. We're a stablecoin issuance and orchestration platform. So we help businesses create their own stablecoins and then have a unified API for converting between dollars and stables.
Awesome. Appreciate it. Chris, why don't you go next?
Hey everybody, I'm Chris. I'm the co-founder and CEO of Plume. We build an ecosystem and a network and a chain focused on RWAs, make it easy access to real world on chain. And so, we do a bunch of things with stables and RWAs and all kinds of stuff. So looking forward to getting into it.
Awesome. And then Fran, maybe you want to cover off for the entire Stable team?
Yeah, sure. I'm Fran. I'm a core contributor. Been incubating Stabull for 3 years now. It is a dedicated piece of infrastructure for stablecoins and RWAs, where you can swap one asset to another or stake. It's pretty simple, core needed infrastructure that's kind of been missing from this space. I've been in the industry myself for donkey's years, and I've seen the rise and fall of consortia and standards and protocol wars and layer ones, twos, and all the rest and everything in between. And I think that stablecoins and real world assets are the only multi-trillion-dollar, sustainable wave for decentralized finance moving forward.
Appreciate it. And for those who don't know me, I'm BOREDELON Musk. I go by Board. And often I play the role of the naive, ignorant person who will ask, let's just call them dumb questions. And I do that because I think it's important for everyone to understand across the spectrum, like about this technology. Yes, there's a lot of people who come from finance and understand a lot of these complex ideas, but I think it's important for everyone who uses crypto to understand these ideas. So I will stop and ask those questions so other people don't have to. So I know with a panel this large, sometimes it's a little tricky to to kind of jump into topics and not want to jump all over each other. But I think we'll be okay. So just to kind of kick things off, I think it's important to talk about where we're coming from. So what challenges would you guys say issuers have faced in bringing RWAs or just assets in general online? Like where have we been, and what problems are we no longer facing or as afraid of?
You want to direct that to one person at a time, or?
Oh man, should we do the roulette wheel? Let's go with Sammy.
Oh, yeah, I think. So you're saying what challenges have they faced in
Yeah.
bringing assets on
What? Yeah. Why?
chain
Why? Why?
up
Why aren't
until
there
now?
billions of assets already on chain? What would be the number one
Yeah,
thing that's kind of prevented it?
that is a really no. I love that question. That's a really good question because we're still very early into this, right? So a lot of issues have grappled with regulatory uncertainty. Of course, there haven't been very clear frameworks on how to do this. Particularly if you're concerning like compliance and classification of all these different digital assets. So that's one. The second one is technical hurdles, which can ensure interoperability between the blockchain platforms and the traditional finance systems and with the newer systems, so to speak. And then obviously privacy security standards. They've all been the largest hurdles, in my opinion, in bringing all these assets online.
Makes sense. It's always spicy if anyone wants to contradict or take an opposing view. I don't think anyone will, but anyone want to add on to that?
Yeah, I will.
Yeah, unfortunately, I probably don't have a opposing take. Or sorry, go ahead.
Well, I just wanted to share a quick analogy. It was about 5.5 years ago that we hosted a large executive-only conference in New Zealand called Security Token Summit. And it was a fantastic time. It was 100 C-level only. And we had the various different stock exchange representatives from Australia, New Zealand, Gibraltar, Securitize, and T0, all the big players of the security token space. And as soon as the conference was over, I turned around to the team and said, look, we're not doing a damn thing at security tokens for at least the next 5 years. Which surprised everyone because they were like, well, we just had this great conference. And the reason was that the regulation is fragmented, the liquidity is fragmented. But now we're dealing with something different. We're not dealing with securities, we're dealing with commodities. And theoretically, it should be faster and smoother to, take real world assets and put them on chain. But there's always that kind of barrier when you have something physical in the real world and you want to express it. If you're just if everything is already digital and on chain, you can wire it up with smart contracts, and that gave rise to DeFi. So that kind of prerequisite infrastructure is already there, and now we're dealing largely with currencies and commodities. But you still need to kind of have a provenance and audits and everything else in place to bring the market confidence that these assets actually do exist in the real world somewhere. And I think we're getting there, and I think that we've actually started to break out as an industry.
Yeah, I probably agree. Maybe the only comment I would say is this: I think largely the RWA conversation has been misunderstood, and people tend to not look at the sort of history to understand what's actually going on here. Which is a lot of people think that just because like a lot of people think it's like a regulatory issue, right? I don't think that's true, right?
Was it just me, or did we lose him?
Yeah, I was just wondering the same thing. I think his connection dropped. Yeah.
Chris, we cannot hear you.
That's okay. Why don't we move on to perhaps Chase, if you want to tackle that question?
Yeah, I think from a stablecoin point of view, I mean, we're working, primarily with payments companies. I think, obviously, if you look at kind of the evolution of the space, I think, regulatory obviously has been a challenge for companies issuing assets, including stables. And so there are a number of high profile issuance projects that really didn't get off the ground really for regulatory. I think, these days it's changed dramatically, obviously led by some of the, recent changes in the US. I think second was obviously like for stables, I mean, to transact, you really need high throughput, low cost chains. I think that's largely solved today. If anything, there's sort of like an explosion of, ever higher throughput chains. I think probably the missing piece today for payments is privacy. Really view that as like the last missing primitive. I mean, we're already settling an incredible amount on chain. I think sort of the regulatories and generally in place. We have the chain infrastructure, and I think with privacy that really gets us over the hump. And I really think we see, almost all payment flows, especially international payment flows, move, on chain.
Hey everybody, quick check-in. I brought Chris back on, and I want to make sure you guys can hear me. I'm going through my PC now. Can you give me a thumbs up or just say you can hear me okay?
Yep.
Yeah, we hear you.
All
Yes,
right.
sir. Do you guys hear me?
Yep, we're good. Okay. See,
Yeah,
it's
good.
another challenge of getting stablecoins online. The internet has to be working for this all to work. There's no internet, there's no stablecoins. Then we have to go back to giving each other grain and rice and bits of gold. So I think we'll be okay moving forward. So we've talked a little bit about the sort of the state of where things have been, and to some degree, a lot of these challenges persist. But I think literally by the day, it's getting easier and a little bit less murky. Somewhat compounding, and this is kind of a good thing and a bad thing. There are a lot of chains. There are a lot of blockchains, like literally thousands and thousands of blockchains. There are going to be more. Kind of a spicy question, but which chains are currently most favorable for stablecoins in RWAs? I imagine we'll see a little bit of dominance by a handful of chains. Are there ones that are a bit more welcoming and or sort of compliant for this type of industry? Chris, maybe we go to you first on this one.
Yeah, totally. Look, I think you guys probably know my answer is the obvious one, but maybe to say something different than what's expected, I think there are no chains suited for RWAs today, and there are no good ones yet. And there's a bunch of exciting stuff. Of course, we're included, but many others as well that I think are really interesting ways to do this. And the reason I think is, I think you start off by looking at you look at adoption and look at usage. Right. If you look at RWAs today, right, forget stables. I think stables are different, right? And stables have a great use case, and there's plenty of places where it works today. So we can get it. But RWAs in general, right? If you look across usage, adoption, and chains, it would lead you to believe that Ethereum is where it is. Which is not to say it's wrong, right? But I think about which blockchain is as sort of the leader here, as both by TVL and dollars, but also how many addresses, what's the volume look like, and all that. And today, it's very bad across all of them, right? You have decent TVL, still pretty small, right, relatively speaking, but volume is low, holders are low, usage is low. So that's why I don't think there is anywhere that this really shines today, specifically, especially compared to another use case, compared to stablecoin. Stablecoins have great volume across all chains, have great usage, have good holders, have good transaction throughput and all that kind of stuff, right? Same thing if you look at like memes and shitters, right? Same thing, right? So if you look at products that have clear product market fit, right, on chain, right, the usage is very different than what we see in RWAs today. So I'd say there is no good place that's hospitable today. Of course, we're looking to change it with Plume, but today I don't think there is a good place for it.
That's a hot take. I like it. That's good for spaces. Chase, what are your thoughts? You want to add on to that?
Yeah, totally. I mean, I think that makes sense. I think again, since we're a stablecoin issuer, I would say for stables, and if you look at the growth rates for stables, that they're pretty much up only on all chains, more or less. I'd say if you look at specifically probably Solana on pure growth rate is what we're seeing a lot on the payment side, but really just seeing like an explosion across the board. I think for payments, the chain piece is almost like overblown. There's so many tools, like there's so many infrastructure layers where they work. At this point, I don't really see that as like the primary blocker. If anything, most businesses we talk to, it's like trying to figure out among 50 chains, sort of like where to deploy.
Yeah, I mean, I think for me, I guess just like putting the consumer hat on, the challenge is I don't want to have to just be constantly switching around, right? And to some degree, whenever you have a market that is potentially this big, it usually settles on 2 or 3. We've got Apple and we've got Google essentially for our mobile operating systems, and I'm very curious to see where things kind of end up getting. I don't want to say centralized, but there's going to be dominant players in the space for sure. I mean, Sammy or Fran, like if you're looking ahead a year or 2 from now, like is there a chain or chains you think will probably dominate?
Yeah, good question. I mean, I partially agree with you that, I mean, it's such an interesting space because it's still so new, right? When we were talking about tokenization a year ago, you know, or some of us a lot earlier than that, back in 2018, 2019. But I'm saying, like, we really approached it like a year ago. It was still like, not sure. What do you mean? Why that? Then BlackRock came in and said, oh, we're going to tokenize $10 trillion worth of assets. And then, you know, the week after, the phones were ringing hot. Like, oh, weren't you tokenizing? You know, so it's like, it's such a new space. It started with, 10 million and a couple of 100 million. And then all of a sudden we got $100 billion and plus on chain that's been tokenized. So it's growing exponentially. I mean, coming from a point of view that from someone, you know, we work with the tokenization of large assets and have tokenized several assets. Obviously, I'm going to say what you didn't say, Chris, of course, is that Plume looking very interesting, I have to say. We've definitely been keeping our eyes on you. And, well, obviously, you know, we already have been chatting for a while. But to name some of your whatever competitors for the sake of fairness, I mean, you know, Hedera's coming in pretty hot. Base, obviously, with Securitize and BlackRock finding the home there. We have Kita, which is heavily funded by Eric Schmidt from Google. There's a whole bunch of really exciting layer 1s and 2s kind of coming. Obviously, Polygon and Solana, all those guys are trying to get into the RWA game. And there's a whole bunch of people that I did not mention, or ecosystem that I did not mention. That doesn't mean you're not great, not building fantastic things. I just don't want to take up all the time here. But I think it's extremely exciting what's coming, and we're keeping our eyes open on everything. When it comes to stables, not really my area of expertise, but obviously running a hedge fund and tokenizing tons of assets, I think the stablecoin market is way more developed, right? We can settle those transactions on multiple chains and have been doing for a very long time. So I'm not worried about that at all.
Yeah, I think, well, I look at the user. So I don't know, picture somebody in Lithuania and they wake up and realize, I need exposure to gold. But I don't want the burden of getting an inter-dealer broker account, buying paper gold. I want something that actually has physical gold in a vault, maybe like the Singapore Freeport, tax-free or special economic zone. And there's plenty of vaults there, and companies like Kinesis.money have tokenized a couple of $100 million worth of bullion. That's a reliable provider. And, you know, what's the user going to do? Well, they go to some decentralized or centralized exchange, and then they procure their gold. That needs to be super easy and super simple. You know, if you can just get a stable.finance and swap USDC or USDT or Brazilian real or whatever into tokenized golds, lithium, hopefully a whole bunch of stuff in the future. The user experience has to be super clean. And so I think everybody wants, well, the market wants chain agnostic. Just like when you're on your Binance account or whatever, and you go withdraw USDT, and it has a drop-down menu of which chain do you want it on. I think that's what the market is hoping for, whether regulatorily the issuers are able to have such free transferability and all the back office considerations to, you know, cycle liquidity between chains or whatever the bridge solutions are. And secondly, I just want to bring up that the nature of wallets is going to fundamentally change. So instead of your little MetaMask or Solarflare or whatever, it's going to end up being a AI text interface. So instead of seeing, you know, balances, you just prompt saying, show me my wallets and show me my balances. And then you'll be able to do things like, okay, great, take wallet number 2 and rotate 20% into gold. And it'll just automatically do that for you. So the assets that are being tokenized need to be freely transferable. They need to be easily accessible, and they need to be swapped with high efficiency. And I think the infrastructure is almost there. There's plenty of people that have been building a lot. And I would love to see, you know, like we would love to integrate Plume, for example. We have a roadmap of things we have to integrate because of where the assets currently are. And a lot of these assets are on Base, so that's our next roadmap integration. We got Ethereum and Polygon, and Base is next, and then we'll look at Plume and everything else. Goes from there. And then the interface has to be simple for users to be able to, do what they need to do.
Bran, I can't wait for the AI
Absolutely.
wallet interface. I really don't want to be using complex DeFi, applications. I want to go to my wallet and say I have this much money. I want it to inspect the contracts and make sure it's safe, and I want it to deploy 20% of my funds into profitable LPs and 20% into gold RWAs and all these other things. And I can't wait for that.
I saw a demo last week, and these guys are using AI tools to build their business out. They probably only have 6 engineers, but they're as efficient as probably 50. They're building so fast, it's just unbelievable. And the demo was pretty insane. It's like, show me 10 different intraday trade setups that are liquid on DeFi on a 1-hour candle, and illustrate as an image, as a chart on a 1-hour candle time frame. And then boom, it just gives you 12 setups with stop loss, take profit, risk reward ratios. And then you can basically say, okay, I'll take number 3, put 20% of wallet 2 into trade setup number 3. So that is coming, and it's only months away. And I think it's going to help the RWA adoption curve.
Yeah, and so much of this stuff, honestly, is really kind of scary to people. They don't know where to jump in. They don't understand how to navigate it and access these tools. And these types of wallets are going to educate people and just give them access that they didn't have before. So I'm really excited as a consumer, and I think that this is going to onboard millions and millions of more people who, much like those who were afraid to code and now can vibe code with AI. You can vibe finance and trade with all these tools that are coming. Chris, I saw you unmuted for a second. I didn't know if you wanted to jump in or if that was just
one, totally agree with all of that, and of course always love to hear people in Plume. So yeah, we should definitely chat after as well. But maybe the other thing, the only question I was going to ask you guys for the broader group was, as it relates to chains, curious to hear people's reactions on these new stablecoin chains, like the Plasmas of the world, and there's a couple others that are coming out that are focused just on stablecoins. Curious any thoughts there, if people have any reactions.
From an infrastructure provider, it's frankly just a pain in the ass to have to integrate 50 different chains, and then it fragments liquidity unless you can somehow share liquidity cross-chain with some interoperability solutions. I would prefer there was just one chain, and it was Bitcoin, the most consensus, the most secure. But it doesn't have the tooling, so the rise of multi-trillion-dollar DeFi exists because of it. I always prefer the simplest possible path for the consumer. And I think we're going through radical experimentation as an industry, and have for years and will for years more. And things will just simply homogenize into perhaps the top 10 chains that specialize for different needs, whether it's interdealer broker, interbank, cross international payments. There'll be different chains for different things, in my opinion. And then it's just about how easy is it to bridge from fiat to this ecosystem, and how easy is it to bridge from one chain to another.
So maybe we segue away from chains and wallets and just talk about what we touched on a little bit, which is consumer adoption, right? Like this space needs to grow. People need to migrate from traditional forms of investing in assets and holding assets, of course. So let's talk about those use cases. Chase, maybe this is one for you to touch on, but what are the either consumer facing or business applications that are gonna basically bring more people to stablecoins and RWAs? Right now, it's been pretty DeFi focused, which makes sense. And Fran used the analogy of this guy in Lithuania wants to hold some gold assets. That makes sense. But what are the other things that people maybe aren't thinking about or don't think about as often that could be an unlock for onboarding millions of people more to the space?
Yeah, for what it's worth, maybe I'll start. I always think of this thing as a function of who's here. Use cases to me usually follow what people are naturally doing, right? I'm not really a believer that we can create new things and people will then come. I usually find that people come and then things multiply on top of that. And so if we go down that road, right, and start with who's here today and what are people doing, the first statement is, the composition of people here, right? And it's still, I would say, 99% crypto people on chain today, right? And so it's going to be mostly crypto use cases, right? And crypto native and crypto first use cases, which tend to be sort of yield alpha, right? It tends to be those types of things that start out, right? And what people are seeking here on chain. So that's the starting point. Now, the thing that is changing here is that the crypto native user is also maturing at the same time, right? And so, whereas people used to be familiar with only BTC, right? And that was the sort of like, the reserve asset of choice. Now it's going into stablecoins, right? And now going to that. And now it's transitioning to yield bearing stablecoins, right? And so you can sort of see how the on-chain audience also matures and adapts over time into different tools, different things they want to do, right? And as you go away from pure alpha, right, into more of a normalization of yields on chain today, right? You're going to expand the size and types of things you want into another dimension. So to me, the use cases of tomorrow in RWAs in the short term are very much going to be similar to the use cases of today, right? It's mostly about yield. It's mostly it's mostly about yield and stability and stable farming and yield farming, right? The distinction here is you could do it with size, you could do it with with real yield, right, and stability versus the ups and downs of DeFi, and that's a starting point. And over time, then as the audience changes, regulation opens up, people can come in, right? The use case of stable and access, right, also changes, right? Then things begin to evolve. And so if you start there with like, what are the types of yields and things we want, it ends up being those types of things there, right? And again, T-bill is a popular product. You have things like Bitcoin picking up some steam. You have CLOs, corporate bonds, sovereign debt. But again, safe, stable things that provide yield. That's like one of it's fixed income assets, right? That tends to be it, right? And number two is you have other things that are sort of accruing value. So rare earth metals, right? Uranium, gold, all these kinds of things are also very popular today, right? And so that to me tends to be where things are right now still, right? It's yield, but new avenues, new sources, right? And new things like that. And then over time will change further. Maybe you get equities, maybe you get all kinds of other stuff. But today it's still more yield bearing.
Yeah, and Sammy, I know on your end, you're advising a lot of businesses from like a business perspective. Are you seeing a growing demand to participate in this space? I think that businesses in particular have felt a little bit restricted in terms of what they could do with their assets, how they could operate, accounting, all that stuff. I mean, do you think the demand side from B2B, I guess, is going to be much bigger than the consumers?
Yeah, 100%. I think one of the most important things to kind of consider, first of all, is I guess what most of the smart guys, I guess, have been preaching, and I've been listening to them, is that first of all, blockchain isn't, in crypto, it's not the solution to everything, right? Not everything needs to be on chain, not everything needs to be tokenized, or not everything needs to be crypto, etc. So that's one thing. But obviously, as an industry, we would like to onboard millions and millions of users. And I think I can think of just quickly three big kind of demographics that are very important. And one is, of course, like Chris said, the crypto natives, right? And they bring their friends online. And the crypto natives are extremely important because those are the ones keeping it alive, keeping it exciting, keeping it moving forward, developing, etc. Right? Those are super exciting. And I think we've seen, although it's been a very failed narrative throughout a couple of cycles, but I do think like gaming, for example, is going to onboard a whole bunch of users once it gets, very simple to use, once it doesn't get blockchain or crypto centric, once it's just part of the game. It's like, oh, how do we get people to use TCP IP? Well, let them surf the internet. Nobody cares what TCP IP is, right? Nobody cares how 5G works. It's I just want it to be fast. I want to upload my shit on my stuff on TikTok or Instagram, etc. So that's the key to adoption is a simple user experience and then community engagement on that, right? But then I think the third one is something I also have a huge passion for, is we are now seeing people that are in great need of, for example, cheaper cross-border transactions, access to decentralized financial services, a potential for earning yield on, if we go back to tokenized assets, etc. And those are people that live in impactful regions with very unstable local currencies, limited banking infrastructure, etc. We have about 2 billion people that are unbanked in this world. It's absolutely insane. So we're seeing technological quantum leaps in all these emerging economies. And I don't mean to sound condescending in any way, but I really kind of mean it when I say they're going from sticks and stones to blockchain, crypto, and AI in no time, right? And that's massive adoption right there. So on top of that, obviously, you asked about the B2B. Yes, it's going to be very important because all the kids today are now using blockchain. Everybody's tired of the banking system. It takes days to send something to another country, or it takes the fees and the settlements and all that. So but I don't see, those are the crypto natives now and the ones coming on board. So I see that it's a natural trend.
I love it.
I guess that was a very long answer. But,
I have a brokerage account with Schwab, and I don't mind them because they answer the phone when I call, but I basically don't have a bank. And I hope that in 5 years, no one has a bank, because they serve no purpose, in my opinion. That does not reflect the opinions of anyone on the stage. I don't think banks have any use. So, but
yeah, I mean, they're going to have to change their business model, right? I'm sure they'll survive for another 100 years or two or whatever, but they're going to have to completely change their business model, right? That's just the nature of business.
Yeah, I appreciate the take, and I think you're right. In some capacity, they will stick around. By the way, if anyone is listening, we've been kind of talking amongst ourselves for a bit, but we want to make time for questions and for other people to come up. So if you do want to come up and ask questions in a bit, feel free to request and do so. Fran, I kind of wanted to throw it to you. Let's sort of look into the future. We're going to make the assumption that pretty much everything is going to be on chain. Our friend Larry Fink at BlackRock said in his 2025 investor letter, every stock, every bond, every fund, every asset, maybe every identity, I don't know, can be tokenized. So just thinking about Stabull, how are you guys thinking about helping issuers, and how are you going to be helping just everyone in terms of discoverability, right? If everything is on chain, it's going to be messy in a good way. So what's Stabull's plan to help with discoverability?
Yeah, sure. I mean, you list an asset on Uniswap. You're an issuer. You tokenize some uranium or whatever. Where do you put it? It's either going to be a federated permission-based blockchain, or it's going to be an open consensus-driven blockchain. And then your options are which chain and which decentralized pool and all the rest, and it's largely self-service. So we realized that, what we can do is actually tell the world that this asset exists and promote them, and, and offer higher yields. If you're more capital efficient and you got better slippage, a solution designed specifically for RWAs and stablecoins with what's called a dynamic sliding off-chain oracle that kind of follows the price so that it's as efficient as possible, then theoretically, people are going to be attracted to the yields there. Like if you want a gold exposure in the TradeFi sense, it's either paper gold or physical, which comes at a premium, and the delivery and storage considerations. So you're basically like paying a fee per year to store it somewhere. Imagine owning gold and then being able to stake it and get even 1%. Or 4 or 5, et cetera, or whatever, just simply from the swap fees. So as people are trading in and out of gold, fees are generated. Those fees then increase APY, and then attracts more people, and then the APY compresses. So the more liquid, the more fees, the more yields, the more TVL or people staking, adding liquidity, and things balance out that way. And so that's what we built. It's just a very simple, dedicated platform and brands to stablecoins for the purpose of swapping one asset to another, or dusting your assets off and staking them to add liquidity and get a yield in return. We're kind of surprised this hasn't been done at scale before, so we're giving it a good crack. Now, if I could just go back to the previous question really quickly in terms of adoption, is that all right?
Yeah, go for it. And by the way, I love that you used uranium as an example of assets that people want to hold. That makes
sense. I would want that. So appreciate you for saying.
Yeah, I mean, I agree with Chris. People want either yield or they want speculation, capital appreciation, etc. Right? And it needs to be as easy as possible, like everyone else has said. But while we're talking about, so I just want to share a couple of kind of facts and statistics. In this space, USD dominates because it dominates globally, and the pain points of underbanking and debanking in Asia and Latin America is such that people are embracing USD stablecoins because it's cleaner, easier, safer than settling a transaction in Argentina for a property. You literally go to the lawyer's office with a giant bag of cash, and so it's helping that smooth out those friction problems and issues. Now, while everybody's sort of before I move on to that, after USD, there's a growing number of non-USD stablecoins out there. But there's a really big drop-off at the moment. And the world's kind of restructuring and reshuffling to a multipolar order, if you haven't noticed, right? And so the one trend that we hope continues is the adoption of non-USD stablecoins and the growth there as well. The other thing to consider is that after the likes of Paxos, Circle, USDC, Tether, USDT, and what Chase is doing over at Brale, there's a really big drop-off in terms of the size of the issuers, right? The Australian dollar team, the Singapore team, Indonesian team, etc. They're all compliance and going by the book and all the rest, but there's not really any sort of Series B. There's a bit of a drop-off. So I think one thing is that investors haven't really clued on to the fact that infrastructure comes first, and we have seen some investments into infrastructure, issuers, or brand new chains. Plume successfully capitalized and all the rest. But I think this year I hope to see a 10x on the infrastructure investments to really help scale things. So that's one end of the spectrum as non-USD stablecoins are hopefully going to continue their growth, and the investment into infrastructure providers will hopefully 10x because it makes sense too. Now, on the completely other end of the spectrum, while everybody's talking about BlackRock this and whatever the news of the day is in stablecoins, the digital yuan went live in 2022. And they've just completed the first transaction. They kind of got 16 different nations to integrate into their TradeFi and central banking systems a alternative to the SWIFT clearing and settlement protocol. And this is huge because it goes from 5 days of bullshit, which is SWIFT, there's no other cleaner way to describe SWIFT, to 7 seconds. It's no longer T0, it's T0.0000. And so if you can ship, I don't know, let's say New Zealand lamb, and you're shipping it to China, and as soon as the DHL barcode is scanned and the bill of lading is cleared, the third and final payment is automatically released by smart contracts in a stable coin. In this case, the example was digital yuan. This is adoption at a sovereign and institutional level that is the retail public is completely unaware of. Now, these aren't assets that you could just hold in your own wallet because of the design of these federated blockchains. It's probably the best way to call them. So you have central bank digital currencies at one end of the spectrum, and then the current DeFi ecosystem at the other end of the spectrum. And in the middle exists kind of a hybrid that hundreds of billions of dollars are set to be rinsed through on a weekly basis. Now, all the infrastructure is already live, and the treaties and the agreements and everything else in the background has been negotiated for years. So that's a pretty big trend to obfuscate away scary crypto and just make these things available from within your TradeFi or banking accounts. And you won't notice any difference except things are cheaper and faster. Now, what I'd like to see is that DeFi is integrated as underneath So that if you're in your, I don't know, HSBC account and you can deposit Bitcoin and USDT, C, whatever, stable coins, and you can see your balance there. When you then convert inside your account from one asset to another, then it actually just routes through to something like Stabull in the background. And the user doesn't need to know that the bank or neobank is actually using DeFi rails in the background. That would be optimum.
No, appreciate that. I mean, and I think connected to that, it's worth asking. So we've been going down this road of, technology is pushing away from USDC or USD, stablecoin kind of dominance, and likely we're going to be thinking a lot more about denominating in all sorts of currencies in a multipolar world. So there's the macro, forces that are pushing that to happen. And maybe Sami, this is a question for you, but in terms of local stable coins, and when I say local, I kind of mean basically not USD. What's gonna drive more non-USD stable coin adoption? Like what needs to happen from your perspective?
Local stablecoin adoption, I think, the central banks are going to have to issue digital currencies, because that's just where we're going. And I think they have finally understood that if they don't, they're going to lose out to the Tethers and the Circles and the Paxos and the whatever of the world. And they don't want their currency to become insignificant, I guess, for some of the smaller nations, at least. I also think it's important because now we're seeing there's always there's been the dollar dominance and all that, and then the BRICS nations are trying to do another currency, and then I think it'll have regional implications. The ones who create their local stable coins the quickest and has the ability to make it the most user friendly will probably be able to dominate their region, right? Because you have to look at it at a micro and a macro kind of climate, right? Macro, sure, you have the dollar, you have the yen, you have all the big ones, but locally, imagine one country just their currency spreading over to another country in the neighboring country. I mean, that's a lot of money all of a sudden. So I think the regional implications will be severe, and we're going to see some interesting financial shifts in the world the next 10 to 20 years. I know Ray Dalio is super big on the big shifts, but I think in the microclimate as well, we're going to see some important shifts, and this will make nations a lot richer and a lot more progressive in technological adoption.
Certainly will increase competition. I mean, Chase, you're in the weeds on this too. Would love your take.
Yeah, I think it's super interesting. I mean, today we're still in a place where 99%, right, of stablecoin market cap is in USD stables, and that is just way too high. I think there's two models or ways to think about it, right? One is that you just get this dollarization on chain where all of these international flows just flow through USDC, USDT, these other branded USD stables, and I think some people do believe that. Like I talked to an ecosystem recently that's just straight up, like we don't believe in local currency stables. I think generally though that's a pretty challenged view. Like I think as Sami mentioned and others, I think just the amount of incentives towards local currency stables are so strong, right, at the sort of the policy and community level. I think what we're seeing now is that in sort of these payment flows, these FX legs of payments, right? So right now what's very common, right, is just chaining USDC or USDT with local payment methods, and that's dramatically better than sort of Swift or even these netting approaches. But it's still very opaque. Like the rates that you're getting, you're going through all these providers, are still intermediaries in some case. I think as the FX moves on chain, which right now is very limited in terms of liquidity, but as we start to get there in some of the corridors, you can start to see is you start to open that up with transparent markets, and you'll drive fees even lower. And so I think there's sort of just along with sort of like the local incentives, I think there are these mechanics here that eventually will drive a number of local currency stables, but I mean it's just really light today. If you look at the if you look at the liquidity, a lot of these are sort of like toy flows today, but I do think they'll start to grow quite a bit, like in the next 6 to 12 months.
Yeah, makes sense. And Chris, I mean, I kind of joked about this, but if USD dominance, does go away in terms of stable coins and people start, paying each other in a variety of national currencies, maybe we also see people just normalizing paying each other in assets that are not sovereign state currencies, right? I'll pay you in uranium, I'll pay you in gold, I'll pay you in Bitcoin. Is that a possible outcome of there being, I guess, like confusion, amongst people who just don't want to have to do all the math of trading and paying each other in different currencies from different countries?
Totally. I mean, I think it's certainly possible. Look, I mean, we've even historically this happened before, right? We used to deal with shells, right, and all kinds of stuff. And like sort of back in the day when the markets were, there was no sort of central place to sort of coordinate these things. We would deal in assets and all that, and eventually we standardized around gold, and then gold became the dollar, and blah blah blah, right? So I can totally see. And look, markets always work this way, where you sort of like you put things together, right? And the sort of like famous what the Jim Barksdale quote is. Right. It's about bundling and then unbundling, right? There's two ways to make money. One is bundling, the second is unbundling. And that's sort of like how things are, right? We're sort of like unbundling and putting a lot of things out together right now, especially as all these things become riskier and less stable, more volatile, right? People are going to flee to their asset of choice, right? Now, the also side of it, like going back to a point made earlier on AI, right? Like if you can seamlessly swap in and out of things, right, and move things, especially without having to do like 10 clicks and to do a bunch of transactions, you can still have this world come together in a single place where maybe it is the US dollar, maybe it's something, maybe it's the digital yuan or whatever it is, right? And then, even if you do want to transact in gold, it still allows you to sort of like coordinate through a single place and then be able to swap in out whatever you want. So you can totally see this as how this happens, right? You see this with the internet today as well, right? Like people used to coordinate through a couple different places. Over time, you have subreddits that come out and different communities come out and sort of deal with their own little communities. And so if you have a community of people who are on gold, paying people and doing things in gold is totally a thing. You could totally see how it happens right now. Is that going to be the dominant way? It's unclear to me, and I'm not sure. But again, like I think that's the magic of making all these things tokens, right? Is people can do whatever they want, and by putting things into a tokenized format and making them flow permissionlessly and through our crypto however they want, then people can cut things and break things up into whatever they want. And I think the interesting thing is also moving into sort of like, again, if you look at Athena today, right? Athena today is not like, it's not a dollar, right? It's a tokenized carry trade, right? Which is the thing still, right? And you've taken some, it's more esoteric and turned it into a unit of XYZ that can now be moved around, right? And you can see much more of that, right? I don't know if you guys saw Neutral recently launched as well, right? So like, again, the thing of this cycle is taking things that are not stablecoins and calling them stablecoins, right? But what is the thing about it is it does represent what people want, which is people just want simpler ways to interact and deal with these things with each other, right? Package new things in different ways. And again, when you move things into tokens, I think the interesting thing is like you can begin to mix all kinds of things together to create quote unquote new assets that didn't exist before, that are sort of a mix of crypto, a mix of the real world, a mix of all kinds of different things and package them in new ways. And then that becomes a new thing. So is it going to be the dollar? Maybe. Is it going to be something else that's sort of more crypto native? That's totally possible as well. So, I'm open to all kinds of things. And I think that's to me the fun part about where we're going is, I think we're still very early in the game. As someone mentions earlier too, like, today is $1 billion in assets, right? Of which like two of that is BTC, and then one is ETH, and then like, and then even like half of that is like actually productive on ETH, right? So it's still very, very small versus like, the trad world and the RWA world, right? And stablecoins and dollars and all these types of things are multiple thousands of trillions of dollars. Right. And so one firm alone, BlackRock, is $12 trillion. Right. And so one firm in the real world is 4x of all of crypto. And so the amount of things that will happen and change the results and sort of like, that's why I think it's a great area, because one, from an adoption standpoint, right, we're going to, it really opens the floodgates there. But number two, if today in the $3 trillion asset class, we have all these chains and all these different things, people are doing what they want, you can only imagine when things grow, 1,000-fold, 10,000-fold, right? The amount of things people can want to do and will do in a permissionless open world are going to dramatically change, right? And to me, that's sort of like the base truth of like what we're doing, which is if we look at, again, someone mentioned before, it was Sammy that mentioned that, but like TCP/IP, right? Like, who cares? It doesn't matter, right? People want to send an email. That's what they really want to do, right? And so, or not, well, that's SMTP, I guess, but like people want to like interact with the web, right? And so if you want to do these things and abstracting these to a higher level, I think that's where it becomes magical, and it allows new things to happen that we couldn't have expected before, right? I mean, the internet was made to browse scientific papers and all, on an intranet, right? And now it's become a place where you're sharing cat videos and all kinds of nonsense on Twitter or whatever, and like so that's what it is. And so I think when you take in information and put them online and then allow it to flow in different ways, all kinds of new things happen that we wouldn't have expected before. And the same thing's going to happen with these assets. When we take products, financial instruments, assets, put them on chain and allow people to do whatever they want to do, it'll create a bunch of new stuff. And so will people just transact in a third party, like, today, alternative asset, right? Totally doable. And you can see it happening, right? Is it going to be something new that we haven't even expected? Almost certainly, so I can totally see all those things happening. But I think in the short term, it's probably still stables because that's the sort of like the way we all communicate today. But over the midterm, you can totally see it begin to diverge.
Yeah, I mean, it's going to break my brain, so I'm going to just transfer everything to Bitcoin when I'm holding it, and then I'll move it back to whatever local currency I need to. Linden bucks.
Exactly, me too. I'm not smart enough to do it,
So, I mean, if you're the dominant player in the space, maybe we talk a little bit about just, regulatory trends in general. And Sam, you kind of brought this up, but have we seen any shifts in regulations that would kind of serve non-dollar, dominated assets? Like if dollars are still 99%, every country that is not issuing dollars probably doesn't want that to be the case. If RWAs are being issued, by non-U.S. States. So I guess, has there been any sort of competition or easing of regulation around the world to basically encourage people to use alternatives?
I wouldn't say that's a kind of it's an expertise area of mine more than I follow the news and I kind of try to stay updated. I mean, what we've seen, I haven't really seen anyone trying to put on some sort of blockage of creating stable coins. It's more the big political question of are the BRICS nations using the dollar and what currency are they trading oil in, all that stuff. But when it comes to creating stablecoins, I mean, I think the regulatory landscape has changed a lot just this year. There's been so many positive news coming out, including on the regulatory framework for stablecoins, etc. I think it's automatic that the U.S. dollar is the dominating currency of the world. That a lot of stablecoins feel. You guys can correct me again if I'm wrong on this, but obviously a lot of them feel like this is a quite comfortable peg to have, right? But have we seen? Yeah, like Fran mentioned. I mean, the digital yuan. We're seeing a digital dirham come out. We're seeing these larger currencies come out. But I personally haven't seen anything that would block anyone or discourage anyone from creating stable coins. We see all kinds of crazy stuff coming out. Some are algorithmic, some are hybrid, some are actually backed by assets, etc. And that's what I love about this whole free venture world, where you're free to experiment.
Yeah, I mean,
as long as you're not doing it in a nefarious way and really trying to scam people, then go ahead and experiment. That's how we bring technology forward.
Unless you're in Europe, because the MICA in Europe has volume controls on foreign USD stable coins. And I think they even went as far as doing something like you can only send a Bitcoin transaction during working hours in some industries or use cases.
And they've been trying to regulate it hard, but also remember there is a plastic, really cool cap for bottles in Europe. Right?
Yeah, I can. That was innovation rushing over me.
I only denominate in plastic bottle caps from Europe when I'm paying my contractors. By the way, it's a very powerful form.
Yeah.
That's
the standing joke on Europe, right? So far behind, but hopefully it'll shift.
Fran, maybe a question for you, but do you feel like kind of the rapid push in the U.S. By regulators to get stablecoin regulations down is essentially trying to prevent, maybe you call it capital flight, or just trying to protect, I guess, USD dominance from moving elsewhere?
Well, I mean,
Yeah, I mean, it's a naturally very smart way of doing it. Oh, sorry, go ahead.
I was just going to point out today is the news head of the SEC's swearing-in ceremony, and he is a notoriously pro-Bitcoin guy. So the days of the Gensler are very much over, and I think we should see the path kind of freed up. But yeah, there's definitely a U.S. hegemony consideration in what regulators do next to keep the U.S. dominance. I think ultimately what's going to happen, if you can kind of read between the lines of being taunting that, hey, we want to get our gold back, we want to audit Fort Knox, and then there's that ominous tweet from 2 days ago, those who control the gold make the rules. I think the world's about to be very surprised that the United States has far more gold and repatriated a lot of its gold from London and Vatican and elsewhere over the last few years. And I think ultimately they're going to have to back the dollar with gold or bullion. The BRICS are already kind of quietly doing this, backing their respective currencies with hard assets. So the world is returning to sound money. A lot of people want, obviously, Bitcoin to be that sound money or underpinning the global economy. I think it needs at least one more cycle, 4 more years to kind of get to a market cap that allows for such things to even be considered. And in the meanwhile, gold's been around forever and is clearly making a comeback. And I think that
China's been buying more gold than they officially announced, right? They've been buying more gold than anyone else.
Way more. I mean, you got a high-ranking DoD official in 2023 on primetime UK television, 6 p.m., saying, yeah, it took us 640 airplanes, C-130s, to get our gold back. And I was stunned. I was like, this should be international news. So I think the global order is reshuffling, and we're returning to sound money one way or another, and that begs the question of what happens to all of the stablecoin issuers. They're effectively tokenizing America's currency, and then America underpins their currency with gold. Is anything going to need to be done, or is it going to be a smooth transition? I mean, the future is going to be wild, right?
Shout out to Peter Schiff. He's doing pretty well today. I'm sure he's very, very happy. But perhaps the Bitcoiners and the gold bugs can both win. I think that is
I think so. Yeah, 100%. I mean, there's absolutely space. There should not be competition. The competition is the, frankly, criminal central banking network. I don't know how else to describe it. I mean, once you study how it works and what usury is and the application of interest to hidden tax over 100-something years, it needs to go. That system cannot continue.
Fair enough, and I think that's why a lot of us are here today talking about this topic. We are starting to get to the end of the time here. I did see that we had a guest come up to ask a question, so I just wanted to throw it to him. Fahad, if you can hear me, if you wanted to ask a question, please go for it.
Well, my question actually shifted with the conversation going on. So my question is actually on the USDT, the stable coins we're talking about now. Hello?
Yeah,
Can you guys hear
go
me?
ahead. That makes
Okay. So do you guys think that it brings a limit to the crypto's potential to the true global financial system? And instead of just hoping on euro or local currency stable coins, could tokenize gold? I don't know if it's even possible. Could we have a tokenized gold, which other commodities which we're able to use on chain?
Well, I mean,
so basically, you're asking,
absolutely,
can gold truly be tokenized on chain? Is that sort of the core question?
Yeah.
Yeah, I mean, so how does Kinesis money or Paxos Gold, how do they actually tokenize? So this is just a 30-second crash course, right? First, you need to get access to a bunch of gold. You need an agreement with a vault that's reputable, like the Freeport tax-free zone and the gold vaults and vault providers at the Freeport vault zone there. And then you need something like a KPMG or a PwC to audit that you're not making more tokenized gold than physical gold that exists. And we want to get away from fractional banking practices. Now, we make it sound simple, but there's a whole heap of technical and regulatory considerations in there. But essentially, you need some asset somewhere, like uranium or lithium or whatever, and you need provenance. You need to prove the where it is, how it is, what format and quality it is, and then you need to kind of bridge it on chain by way of creating proxy tokens that express that value or those units of account. So it's not hard, but it's also hard because of the regulation and the kind of choice in technology and how to go about it for different use cases. So tokenized gold already exists, and I think Paxos is seeing an influx in assets under management at this time. So when they have more demands than gold exists, they actually need to go and buy more bullion and then tokenize it, as they're buying it. And same thing with Bitcoin ETFs, theoretically. People are buying the ETF and they don't have the the full amounts. Just waiting for buyers. What they're doing is buying and selling and keeping their inventory levels optimum to meet supply and demand.
I will only be buying my gold from folks who have a live camera footage in the vault, and someone is talking live, and there's a newspaper that says the date, and that verifies that it is real. I am kidding, of course. Awesome conversation, guys. I learned a lot. I hope everybody listening learned a lot. This is, of course, recorded, so anybody who didn't get to join us live can listen in the future, and I'm sure many people will. So before we close things out, just massive appreciation for SAMI, Chase, Chris, for joining us today. Would love for you guys to, similar to our intro, take 30, 60 seconds, maybe just talk a little bit about what you guys are working on, or if you want to direct attention anywhere in particular. So Chris, maybe we start with you if you want to talk a little bit about Plume and how people could get involved. Oh, we lost Chris.
Chris is a listener, so you got to upgrade him. No, you got to upgrade him to speaker.
Okay, 1 second. I'll do that. So instead of, okay, Chase, why don't we go to you while I'm doing that? If you want to share a little bit about Brale.
Yeah, for sure. So we're trying to make it as easy as possible for businesses and communities to issue their own stablecoins. And I think, having been building since 2021, I think in the early days, a lot of people would say things like, why do we need another stablecoin? And I think today you just see an explosion of stablecoins. I think really, like, if you look at what JP Morgan's doing, the Bank of America news, look at Revolut, I mean, there's a whole list of things that haven't even been announced. I think it's just really an exciting time seeing everyone trying to get into the issuance game. And mainly, a lot of this is people seeing, really how much money Circle and Tether are making. But I think in particular, this is a really exciting time to give power back to businesses and communities to let them benefit from issuance. If you think about issuing a currency, it's something in the past that really only governments were able to do. And I think now giving that sort of open access to the rest of the world is really cool. And that's what we're working on at Brale.
Appreciate it.
Love it.
Chris, you're back, so yeah, go ahead.
Yes. Sorry, I don't know what's going on with my phone. It's been so spotty this morning. But yeah. First off, thanks for having me, and great to get up here and chat about RWAs and Stables, especially with all the great folks on stage as well. So appreciate it. Maybe really quickly in 2 seconds. Plume, we're building a network, a new chain for RWAs. We've we're taking out the mainnet fairly soon, and so a lot to come around there, around new things to do on there. There's a ton of stuff happening, whether it's sort of institutional assets that you can access, whether it's things like gold, uranium, we have a bunch of that kind of stuff. We've got also more esoteric things, like camels and all kinds of stuff. And the idea is to make it very simple, right? For you to interact with the real world as easily as you do with crypto native assets, right? And begin to mix and match things together and create a new sort of surface area for us to create a new ecosystem around this stuff. And so anyway, really excited to kind of bring this out and show people. So anyone that wants to chat about anything, whether you're building a project or just want to chat about RWAs, we're always down. So ping me anytime. Again, stop by the website or our Twitter, check it out to kind of stay updated on kind of what's coming here. And looking forward to see you all soon on around crypto. But again, thanks for having us, Board.
Yeah, absolutely. Thank you so much. Amazing. So, SAMI, anything you'd like to highlight before we close things out, or drive people to?
Just want to say thank you for having me, and thanks to all the panelists and all the listeners, and of course you as the host. No, we're working on, like I said, we're working on tokenizing assets. So anyone in RWA, anyone tokenizing assets, feel free to reach out. And yeah, we're working on tokenizing very, very, very large assets coming out of the Middle East. But yeah, I can't really speak too much on it yet. But keep your eyes open, because it'll be a ground-changing kind of thing coming. So yeah, thank you for having us.
Fran, want to close things out with a little bit of a plug for Stabull as well, and maybe let people know what's coming soon?
Yeah, sure. And thanks everyone for joining us today. We wanted to sort of create some content that helps educate people in a non-technical way about this industry that's exponentially growing. So check out stabull.finance, stabull.finance. We have an app that's live. You can swap various different assets. We're looking for liquidity partners at the moment. If you want your asset listed, contact us. We're also live with a public sale at the moment on probit.com, probit.com. You'll see the Launchpad button on the top menu, and you'll see our offering there. And yeah, our destiny as Stabull is pretty simple. We're just integrating more chains and adding more pools, and just being that optimized layer that allows people to swap one asset to another, or dust their assets off and earn a yield by providing liquidity. So yeah, great chat today. I've learned a lot as well, and thanks for hosting us.
Absolutely, thank you guys. It was a pleasure. By the way, if anyone's planning on going to BTC 2025 in Las Vegas this year in May, I may show up, so it'd be good to hang with you guys if you're going to be there in person. But yeah, thank you to all the panelists, to Fran and team over at Stabull for helping set this up. I think we're getting into a very exciting space, and again, like this, part of the reason I wanted to kind of join the crew and act as an advisor for Stabull is because there's so much that I don't know in the space, and I'm learning so much every day, and I truly think that as the global world order changes, to quote Ray Dalio, it's very important to have an understanding of the space and how to navigate these waters. So yeah, appreciate you guys for sharing all the knowledge. We'll do this again very soon, I'm sure. But for those of you who joined today, thank you again for listening. Thanks to everyone in the future who's listening to the recording, and we will talk soon. Take care, everybody.
Thanks, everyone.